Welcome. Let let me begin. This is the weekly recap, re- rewinding the revising the events that happened over the week. Okay, so first I'll go through the economic calendar, then go through the news that we had during the week, and do a recap of commodity prices and prices of assets. That'll be in the end. First, let's look at the economic releases. So the week beginning 26th June, on Monday, there was no major event. I filtered this to only show the most important ones. So on Tuesday, we got the building permits, core durable goods orders, consumer confidence, new home sales. So this data on new home sales was particularly important because it showed the US economy is very strong, the consumer is very strong, more people are going out and buying more houses, and therefore it's not likely to have an economic slowdown with such strong numbers on the home sales. So you can see here, this was last year, October, of 588K. So we got numbers started picking up, and now we're at 763K, even very high from the forecast of 675K. So these numbers are very strong, and a home is a big purchase. So if many people are buying houses, it means the strength of the average consumer is also increasing the spending power. So yeah, that was it with the home sales. Consumer confidence 109. So this is something else to look at. This 109 number, consumer confidence index, means the average consumer is feeling very good about the economy. So according to how the world works is people spend money according to, okay, the average consumer, they spend money according to how they feel about the economy. If they feel the economy is doing good, they'll they are more likely to spend more money because they are confident that they will earn it back and earn probably more. So yeah, consumer confidence is for that. It being higher than expected shows that people are feeling good about the economy. Core durable goods orders. Um, I believe you know what durable goods orders are. These are major purchases. Transport, transport, transportation materials, big machineries, durable goods orders. So if there's an increase in this number, like you see, there is an increase here. The forecast was a decline, but there was an increase the month over month. So that means that's you can see all this data, they are pointing toward the same direction, a strong consumer, which is um, which is good news for the economy, the US economy in this case. So let me not go deep into these numbers. At the end, at the end on of this recap, that's when I'll talk about why these numbers are important. Wednesday, Fed Chair Powell speaks. Uh, this was the no, this was the, when is the June 21st. This was the no, not 21st. It was 28th. 28th. Wednesday 28th. Yeah, this was Jerome Powell, the policy panel discussion at the European Central Bank Forum on Central Banking 2023, Sintra, Portugal. We I already have a separate video for that. There was there was a whole discussion of the four main central bankers. There was Chair Jerome Powell, central bank representing the Federal Reserve, Christine Lagarde, Christine Lagarde, head of the ECB, European Central Bank, Governor Bailey, head of the Bank of England, and then Ueda, Governor Ueda is a governor for Bank of Japan. So there were those four guys at the panel discussion. It was a very hawkish. I have a separate video for that. It was a very hawkish discussion. You're going to check it out. A link should be popping up somewhere. Okay. Oh, back to here on Thursday. Yeah, it was the same event. The same event on Thursday, but this one it was a dialogue with Bank of Spain governor. Yeah, this one was not so important. You can even see the timing. But this one, the timing, it was very important. It was at the New York Stock Exchange open. That's when the New York Stock Exchange opens. So yeah, and the discussion did cause a lot of volatility in the market. So Thursday after that one, there was a got the GDP final reading. This one, um, GDP final reading 2%. Let's look at it. 2% is a very strong number for an economy that you expect to be slowing down. Like Fed Chair Jerome Powell said, period of below trend growth, blah, blah, blah. So, yeah, you can see this 1.1% and this other 1.3%. These were the preliminary releases for the Q1 GDP. Then the final one came in strong, 2%. So this previous number, it shows the final reading for the previous quarter. So you can see here, the GDP has never been below 2% for for since Q4. Yeah, since Q4 coming now to what you're expecting Q1. The GDP has, since it jumped up to 3%, it has never been below 2%. Yeah, so these are strong numbers, and that means the US economy is doing good. And incoming data, such as we will see in a few, is showing that these numbers are likely to, they are sustainable. Yeah, so GDP and then jobless claims. This is another important number. This is the last reading that we get before the NFPs. The NFPs is this week on Friday. Yeah, this week on Friday, and I think, yeah, when a number comes in like this means that less than expected people are filing for unemployment claims. So you can expect a strong number, and probably very likely to be an, yeah, you can expect a strong number in the jobs market because of this sudden change in the jobless claims numbers. Yeah, but we'll just have to wait and see. There's more data coming. I'll look at it in the next video when doing the forecast for what we're supposed to expect next week. So you can wait for that. Pending home sales, this one not too important. Manufacturing, PMI for China, GDP for Britain, CPI for Euro 5.5%, slightly lower than expected. And then the PCE, the PCE. This is the this was the main one. This is this is the Fed's preferred measure of inflation. Let me change the filter so we can have a closer look at Friday. The PCE is what the Fed uses to see the picture of inflation in the whole country. Yeah, because there were a lot of releases on Friday. Where is it? No, wait, no, but there, no, it's here. It's here. Core PCE, 4.6%, slightly lower than the expected number. This is good news. Core PCE price index for the month 0.3% according to estimates. This is good news. PCE price index. Now this is the non-core. This is the headline PCE year over year 3.8%. significantly lower than the expected 4.6% and even lower than the previous number, 4.3%. Let's look at it. Let's look at the trend. This is PCE peaked at 6.8% last year, July. This is July last year. It's when it peaked, and then now we've come down from 6.8, 6.3, 6.5. So yeah, you can see it's very. There is a convincing trend here. There is a convincing downtrend here that PCE is slowing down, which is mostly good news, which is what the Fed wants to see. But when we look at the core number again, the the core PCE isn't exactly showing that significant decline. You can see it's still very flattish. Yeah, even the reading we got here, just a slight miss, but it's still very high above the Fed's 2% target. So yeah, you're gonna have to. That's something important. Okay, now let me go to the other release. Other stuff that happened throughout the week. This is babypeeps.com. You have a global market quickly recap. I'll drop the link in the description. Don't worry. Hawkish central bank rhetoric during the ECB forum on central banking also affected overall market sentiment, especially since the arguably upbeat outlook was underscored by mostly strong data. Yeah, there was very strong economic data coming in through the week. Notable news and economic updates. Crude oil opened slightly higher after a failed coup attempt in Moscow as Wagner mutiny convoys returned to bases and charges against Prigozhin dropped. People's Bank of China set USD CNY reference rate lower than expected during the announcement Tuesday and Thursday. Okay, can skip that one. Come here, you can see this is a recap of what we have already talked about. May core durable goods orders rebounded 6% overestimated drop. Consumer confidence index from 102 to 109, highest level since early 2022. Initial jobless claims, easing fears of a US labor market slowdown. Yeah, so that was something good news because it shows you can expect strong data come next week. Strong employment data come next week. That's just a sign, one of the many signs that we'll be looking at. US final Q1 GDP revised higher to 2% year over year growth from 1.2%. We have talked about that. Broad market risk of arguments. Citing, okay, these ones you can skip. You can just come here for the brief comments on ECB remarks. Remember the video, the separate video that I did for this conference is in the link in the description. Petya Pal said, although pause policy is restrictive, it may not be restrictive enough, and it has not been restrictive long enough, upping the odds of two more rate hikes this year. We're going to look at this a few. Let me wind up with this one. ECB Chairperson Lagarde noted impact of tight labor market on wage increases, which are further stoking inflationary pressures. Bank of England head Bailey pointed to noticeable signs of sustained inflation in the UK economy and that they will take all steps necessary to bring it back to targets. BOJ Governor Ueda reiterated their plans to keep monetary policy unchanged, blah, blah, blah. Okay, done with that. All this other stuff is not important for now. Mm, Now I would like to switch to the CME Fed Watchtool. Before now, I look at the charts and how price action was. So this is the Fed CME Watchtool. Link is in the description. This shows the probabilities for a rate hike in the coming meeting. So this one shows there's a 86% of the market is expecting a rate hike in the next Fed meeting, 86%, a 25 basis point rate hike in the current in the next Fed meeting, which is in 24 days. Yeah, in 24 days, the next FOMC meeting. Market is expecting there's an 86% chance that the Fed will hike the rates. 15% chance of a pause, which is very worrying. Very, which is, yeah, this sentiment is overall bullish for the dollar, and we're going to see that in a few. So, this is the change in probabilities. One day ago, no, this is ignore this one. 1 week ago, there was a there was a lesser probability of a rate hike 1 week ago, but now since the incoming data of this week has bumped up that probability up to 86%. So you can see how the probabilities are shifting, and you can expect by the time the Fed is coming, the probability of a rate hike will probably be as high as 96%. Yeah, depending on what incoming data shows. Yeah, we're going to look at them. So there's something else important: probabilities. You can see here this little probabilities here. This table is very important. It shows the number of rate hikes the market is pricing in. So currently, this is the current rate, 5.25 percentage points, and the market is pricing in 3 rate cuts before the end of the year. 3 rate cuts, three rate hikes before the end of the year. These are rate hikes. These three. So yeah, before the end of the year, and even in the first meeting of 2024, 2.9% of the market is expecting the Fed to hike rates again in that meeting. So these probabilities are highly affecting the movements on the dollar index, because if there's more probabilities of a rate hike, you can expect the dollar index to be more bullish. So yeah, this smaller table is a simplification. Let me see if I can zoom in. Oh no, it's nice. This small table is a simplified version of these probabilities. So the meeting dates, days to meeting is no change hike. So there's an 86% chance that the Fed will hike rates in the next meeting. 89% chance they will hike in the September meeting. Then yeah, you can see these probabilities are very high for the rate hikes. So yeah, you can expect the dollar index to kind of be bullish for a while, because if the market is expecting more rate hikes, of course that means the dollar index is likely to go bullish more. Now let me wind up by looking at the charts. Here, yeah, here we are. So this is the chart of the dollar index. As you can see, okay, my chart is plain. It usually looks like this. So there's Monday. This let me thicken the period separators a bit. Period separators, they're very important to note which days you are looking at. Yeah, I think that's better. So you can see this was on Monday. Monday quite flat. Tuesday, a small sell-off. Then on Wednesday, this is when the European Central Bank Forum on monetary policy was happening. This is where Jerome and the other central bankers were discussing monetary policy, and the dollar gained quite a lot when Jerome was talking about that they might have to raise rates aggressively again, because inflation is going to take quite long to fight. So yeah, this was Wednesday. This was on Thursday, was also bullish, but there was kind of significant retracement here, but also bullish. And then on Friday, when the PCE released, when the PCE dropped, uh, especially that headline PCE number, headline PCE year-over-year change, when we have seen it dropped to 3.8% versus the estimates of 4.6%. It was very it was very hopeful that the Fed could. It was very hopeful to the markets that maybe the Fed might take that as a sign that inflation is cooling and eventually not have to raise rates as high as they would have. So yeah, you can see the markets dropped quite a bit and stabilized there. So doing some brief technical analysis, just showing that, highlighting that support. You can see price seems to really be holding up well above this support. I guess on Monday, going to wait and see what price is going to do. But okay, my short expectation is that maybe I'm going to see price come slightly below, probably to this low, then make a double top like that. I just think that's what price is going to do. I don't know, but that's what I expect. That's what I am expecting price to do for next week. Of course, the dollar index is likely to continue this bullish trend. Now that the f- the Fed chairman Jerome Powell has revived the possibility of aggressive rate hikes. So yeah, I don't pay for trading view, by the way. Don't ask me why, but I just don't. So yeah, that's it for that one. The stock market here. This was on Monday. There was a steep sell-off on Monday. On Tuesday, buy bought. On Wednesday, where market closed green. On Thursday, on Wednesday, this is where the central bankers were having their discussion. You can see the market quite moved up quite a bit. This was 100 points back and forth. So some volatility there. On Thursday was a red day. Then on Friday, the market almost closing flat by Thursday open, but on Friday the PCE came out and it was very bullish for the stock market. Yeah. Anyway, um, let me look at the SPX. This is the S&P 500. Let's see. So for this one, you can see it was mostly in an uptrend for the better half of the week. On Monday, slight sell-off. On Tuesday, bought off. Yeah, and then on Wednesday, this on Tuesday, yeah, this is where we got the housing numbers, which raised some optimism that the economy is actually doing very good. And yeah, that's why you can see this uptrend, this significant uptrend in the market was brought about by those housing numbers. They were very good numbers. So on Wednesday, the central bankers discussion, then on Thursday, and then on Friday, the PCE. So you can see the stock market did pretty well here. Another thing, on Wednesday, this is when the the Fed released data on stress test. There was a stress test on banks on if they were able to survive a recession, if a recession happens, if they would be able to survive, and most banks passed. So yeah, that was some good news here on Wednesday. Okay, that's it for this video. I'll have to stop there. Catch the next video. We'll be talking about the economic calendar, the forecast for next week. I didn't want this video to be long.